we still have a few people joining us, but let us get going today because we've got so much to talk about in today's webinar. I don't want to delay the start. For those who haven't met me, I'm Sarah Corley. I'm the Community Manager for Digital Frontiers Institute, and it's my pleasure to have the ability to host these kind of webinars. So we are joined by 5 special guests today, and it's mainly thanks to Senfrey who have put this together. So I'm going to hand over to your moderator for today's session, who's going to introduce the panel and introduce the topic and tell you a little bit more about how the session is going to go. Just before I do that, one reminder to you, please, we're going to have lots of questions today, I'm sure, because there's lots of debates and discussions going on. When you scroll to the very bottom of your scene, you'll see a little function called Q&A pop up in the menu. Please do put your questions in there. It makes it much easier for us to follow and make sure that we get round to answering them. And if you could indicate what country you're in and what organization you're in, that will help us with tailoring answers to your questions as well. So thank you all for joining. I'm excited about what we're going to discuss today, and I'm going to hand over to Henny, who is our moderator today. So Henny, over to you.
Sarah, thank you very much. Good afternoon to all. My name is Henny Bester. I'm a director at Senfrey, and I'm the program lead for Insight to Impact. It's a pleasure to have you with us today. This webinar series, and we hope to have 3 of them, is really a forum to just place some core data on the table around which to discuss options for dealing with the economic impact in particular of the current pandemic. The next one's likely be on the 6th of April, but Sarah will let you know more about that. The intention of the series is not to present any definitive set of potential responses by public or private sectors, but really to put some basic data on the table and to explore possible ways to do that. And to assist us doing that today, we have 4 very special people to assist us. So Leon Isaacs is the CEO of Development Markets Associates Global and the former managing director of the International Association of Money Transfers. He has a quarter of a century experience in payments and remittances, and he's led DMA from about 2007. DMA is based in the UK, but Leon will be speaking to us from the south of France near Avignon, where he's locked down at the moment. And Leon, I hope not only in-house, but also a little bit out of house as well. Our second panelist is Professor Inka David West. She's the academic director at the Lagos Business School. She's also the Operations, Information Systems and Marketing Division Head at the business school. She has over 2 decades of experience in the Nigerian IT industry. And from experience, I can tell you, Inka is the go-to person if you want to understand digital payments in Nigeria. Inka, it's wonderful for you to be with us. And she's in Lagos. Then in Johannesburg, we have Nikki Kettles. Nikki is the executive manager of programs at Finmark Trust. She's a civil engineer by training. She's had a great industry in the career in the banking industry. She established the first smart card facility in the Southern Hemisphere in South Africa. She developed the first prepaid voucher for GSMA, and also a person-to-person remittance solution for a credit card provider. She's now with Finmark Trust, where she's pursuing a passion of getting poor people into the financial system. And finally, in Cape Town, Nikki's in Johannesburg. In Cape Town, we have Barry Cooper. Barry's a director at Senfrey and the former head of banking, consumer banking operations in South Africa for Standard Chartered Bank. He's got a big interest in development and the regulation of digital payment systems. He's been involved in the ITU, particularly their focus group on digital financial services. And Barry's been working across Africa in remittance solutions. So Sarah, perhaps we should go on to our presentation now. If you can share that. Yeah, great. So remittances are particularly important for Africa. And the way we will structure this afternoon's presentation and discussion is firstly just to look at how significant remittances are, inflows particularly to countries in Africa. Then we will look at the sending countries, and Leon will give us some perspectives on what is happening from that side and what the perspectives are there. Then we will look at the receiving country perspectives, and Nikki and Inka will assist us with that. And then we will try and just get a sense based on previous experience quantitatively, what was the impact of previous crises on the remittance flow to Africa? What can we expect? And potentially what should suitable responses or possible policy responses be at this time? So Sarah, if you can go on to us to slide number 4. You've got our panel there. So we looked at the proportion of capital flows to Africa that is constituted by personal remittances since 2018. So we analyzed data collected by the World Bank, and you will see from this slide that personal remittances into Africa constituted about $84 billion in 2018, which substantially outdid flows of foreign direct investment, which was about 47 billion, and overseas development assistance, which is about 55 billion. As you will see from later maps, there are, once you start disaggregating this into different countries, some challenges arise with the different calculations. But I think the 84 billion is roughly the calculation of what is the total amount running into Africa. If you break that down by country, if we can go to the next slide, Sarah, and we look at the impact on individual countries, you will see it varies substantially. The largest dependency is one of the smallest countries in Africa, which is in Southern Africa, Lesotho. It's about 23%. So these are the percentage of GDP, which is constituted by personal remittances for these countries. If you go to a country like Egypt, it's about 10%. A country like Zimbabwe is 6%. And then obviously you've got smaller percentages in the different countries. Now, obviously, the impact of the drop in remittances we'll discuss a bit later. But just to keep in mind that it's not only the percentage of GDP, obviously, that is significant, but the fact that Forex is a very scarce resource in all of these countries, and therefore a drop in remittance flows has a disproportionate impact on the welfare and growth prospects in a particular country. If you can go to the next slide, Sarah. The question then is, and we're going to ask Leon to come in here. So what is likely to happen as a result of the virus? And that obviously requires a look at the origin of remittances. So if you can go on to the next slide, Leon, over to you. It's going to be interesting what's going to happen. And the first one gives us some impression of what's already happening in Kenya. Leon.
Great. Thanks, Henny, and good afternoon to everyone. Yes, I'm locked down in the south of France, but I guess if you're going to be locked down anywhere, there's worse places. It's partially to stay away. I'm sure many of you will have seen that Prince Charles has now contracted the disease. So I suspect that's going to get a lot more attention in the UK anyway. I think just to sort of give some perspective on what we're seeing here in Europe generally is that, as many of you know, the European countries have by and large adopted their own individual approach to the COVID-19 crisis. There's not much in the way of coordination, and most of their focus, probably understandably, has been on national issues. Nearly everything has been focused on short-term initiatives, apart from some of the finance packages, but even those are short-term focused. And I think I'd say that a day is a long time in the crisis at the moment, all of which makes it a little bit difficult to give any true longer-term picture. But I think it's important to understand that at the moment, everything is happening short-term. If we could go to the next slide, please. Great, thanks. So just to put this into perspective, here's where the African communities are by and large throughout the world. And you can see the largest groupings are clearly in Europe and in Asia Pacific, which for these purposes includes the Middle East, the Gulf states. And then the US, we know, has a large population of Africans and is the single biggest country sending to the region. I think to put the European situation in perspective, 88% of those people are living in 5 countries: France, Italy, Spain, UK, and Germany. And I think, as you all know, they're all either on complete shutdown or nearly on complete shutdown at the moment, which really means that many people are now not able to go to work or are working under quite stressful conditions. And we know, that migrants from Africa work in a lot of different areas, but there's a large group in the health service, so they're going to be fully employed and probably very worried. Then we've got a lot in the retail sector, in the transport sectors, and a number obviously in the professional areas. And we anticipate that, like many, a lot of these people are not going to be able to work at the moment. And although most of the countries have put in place some specific actions to try and support salaries if they're not able to work and so on, I think that what we're going to see is that many people are, and we're already seeing it, they're not sending, or they're holding off sending remittances at the current time. Talking to a few operators sending to Africa, we're hearing figures as much as up to 40% that have declined over what they would have expected in the last 2 or 3 weeks. So it's normal, we see that happen when a crisis comes, but obviously people are very concerned about how they will survive. They're not able to travel back home even if they wanted to, and they don't want to be sending money until they know they're going to be able to solve their own situation, and then they'll send money. I think that's what we're seeing now. One of the other things that, of course, we're seeing, apart from the individuals actually having money to send, whether it's in their savings or earnings, another challenge is that, of course, despite what we might think, the majority of transactions across Europe still or were going in cash, and that is very much through agent-based locations. And many of those are now shut. In fact, I think in the UK, corner stores can remain open, so some of those cash-based agents will be there. But in other countries, it's only banks that have been deemed as essential service providers. So those are the only other physical locations that could handle remittances. But I guess we look at that and we say, well, there's an opportunity for digital payments. And I'm sure we're going to talk about that in the next few minutes as well. And I think what we've seen is lots of companies that have both digital and cash-based services promoting and advising customers to only operate digitally. I think we've seen other companies that are really struggling, the cash-based ones. And I guess those that are purely digital and have always been purely digital are emphasizing their services. But for the money transfer industry as well, it's a problem. Obviously, many of them, they need to make sure their staff are well. And we're seeing a number of them have switched. In fact, many have switched to home working, which is clearly not really seen by the customers. But it is a challenge for businesses to make that happen and make sure everything is secure, etc., etc. So I think really challenging times, but I think definitely there are opportunities to move to digital. But I would caution that by saying, in the case of the UK, the domestic payment system is highly digitized, and the case in France as well, reasonably so. But in the southern European countries, much harder. And a lot of people don't understand how to use digital, certainly how to use digital to send remittances. And it's going to take a lot of time and education to move them to change their habits. So I suppose I should stop now by just saying, in summary, volumes will drop. I think we will see people will switch if they're given the right education. And importantly, services are still running from this end. And perhaps this is a final thought to segue into the later ones. One of the challenges that many customers are saying is they're not sure whether the receiver is going to be able to collect their money. And that's an area where we need some sort of means of getting that information accurately and timely to them. I'll stop there, I think, Henny.
Thanks, thanks, Leon. Sarah, if you can perhaps just go to the next slide, because in the next slide, we give you the origin of funding from the African diaspora. So you will see there that roughly $17 billion flow out of Europe, a roughly equivalent amount out of Asia. And Asia includes the Middle East for the purposes of this calculation. About 11.2 billion flowing out of North America, just under 10 from Latin America, and less than $1 billion from Australasia into Africa. So thanks, Leon. Then let us just check, are there any specific questions to Leon just on the impact from the North American side? Sarah, I'm not seeing any digital questions yet coming in. Let's leave a minute. If you want to ask questions, just type them up and they will come through to us. Let's then move on, thanks to the next slide, Sarah. So we then asked, well, we also have remittances happening within Africa. So you will see there that there's roughly 18.2 million migrants moving between countries in Africa. And there are obviously some core centers to which they move, notably countries like South Africa, Nigeria, and Kenya. And then there are a secondary set of countries sending migrants that would be particularly sensitized and sensitive to impacts. If you go to the next slide, you will see that the total amount of internal ones, now that's if you can go back 2 slides, Sarah, please. One before that, right, that one. So you will see that the total amount of remittances flowing internally in Africa is just short of $13 billion. So to help us make sense of the impact that a drop in remittances will have in Africa, let's firstly turn to Nikki. Nikki, when you look at this, you've got particular networks in SADC environment in Southern Africa. What is your sense of what's going to happen? Nikki, just you. Yeah, there you are. Great.
Muted. Sorry. Thank you, Henny, and thank you, Leon. Good afternoon, everybody. Leon, thank you. I think your sentiments are very similar to the things that we are worrying about, but on a smaller scale. So if I can set the scene on what is happening in SADC and on the migrant situation. So we have a situation where we believe there's about 3.7 million migrants living in South Africa. There's a large proportion that are undocumented or don't have the right to work, but that is the estimates. And we've made huge strides in terms of digitizing the channel, not the cash in and cash out, which is something else that Leon spoke about. So 3 years ago, we were talking about 70% informal. Now we have 50% informal of people using that digitized channel. And with this and what is happening now, there's opportunities and there's also some worries. We estimate currently, so if you look at that $12 billion on the continent, the formal and informal remittances outside of South Africa, so from South Africa to SADC, sits at 1.5 billion. So we're quite small numbers, but it's still very, very important numbers to people in the region. Like Leon said, the impact of Corona and our shutdown. So we aren't yet on full shutdown. We go on to full shutdown at 12 o'clock tonight. Eswatini goes on full shutdown at 12 o'clock on Friday night, and across the region, everyone is going on full shutdown. If we look at our migrants in South Africa, most of them work in retail, in transport, our Uber drivers, in the service industry and supporting people in their homes, and a big one is in the restaurant and tourism industries. And every single one of those industries are going to be closing down. Unfortunately, I am sure, I don't have the evidence, that a lot of the undocumented will most probably just be sent home because they have no legal recourse. Everybody else will be looked after. The government has put in a lot of support. They want to support the SMMEs. They are allowing undocumented migrants into our hospitals. And then they've done a very interesting thing. They're building a 30-kilometer fence between ourselves and Zimbabwe to stop the informal migrants. So you can see it actually starts to put pressure on the migrants in Zimbabwe that we estimate are about 1.8 million in this country. The work that we are doing and the way we are trying to approach it is, obviously we would love everybody to be digitized, but all of those challenges as to why people are not digitized and we haven't been able to digitize for the last 10 years are not going to go away. Leon spoke about the financial education. In our region, it's often about access. It's about, you know, do they have the data? Do they have the smartphones? We were advised this morning that Eswatini has now totally digitized their pension payment system, obviously to keep the elderly out of public spaces, but we're not sure how that's going to work because there isn't an ecosystem to go and buy goods. So we're watching that one closely. We are also currently working very, very closely with some of our policymakers and regulators because it's cash in and it's cash out still. And while we don't want it to be cash in and cash out, people need to get the money. And in the short term, in the next 3 months, we need to do everything that we can to ensure that that is being assisted and facilitated. The banks and the ADLers at this stage, as far as we know, the ADLers will be remaining open. And the agent networks in country, we are not yet hearing that they are closing. And that's part of the work that we're looking at to make sure that we're allowing the free flow of the limited amount of remittances that is going to be going to continue in the short term, while obviously working on a long-term plan. I don't know if there's any questions on that.
Nikki, thanks for that. Let's move then to, we'll take questions hereafter, and the questions are starting to come in. So Inka, from your side, Nigeria is the economic powerhouse of West Africa. You have many migrants from neighboring countries in Nigeria. You've also started to go into a lockdown mode, although I don't think fully yet, but you can inform us about that. Your view on what will be the economic impact, both for reduced remittances from Europe, but also from Nigeria to neighboring countries. Inka.
Okay, great. Thank you, Henny, and good afternoon, everyone. Well, Lagos is on partial lockdown now. We're starting that process. From tomorrow, the governor just announced that all markets will shut down except food markets and medical markets in general. So let me just run us through. West Africa is a region of about 16 countries, and some are Francophone and Anglophone countries. We have a population of about 380 million, of which Nigeria is about 100 to 200 million of that. And our regional organization is the Economic Community of West African States. Now, Nigeria plays a big role in the region, other than being the largest country, but it's also one of the ones that welcomes many West African immigrants and is also like a central hub for commerce and trade. So last year, the Nigerian government, to curb corruption as well as smuggling, shut down its borders, our land borders, and that caused a lot of disruption across the region and across some other states in Africa. But when we look at remittances in general, we find out that there are two types of remittances. There's the formal and the informal. And the informal take a large sector, because they're about 40 to 50% of the remittances that are recorded, from what estimates and Pricewaterhouse estimates say. And then a lot of that is also what happens within the West African region, where people are sending money across the borders with transport operators and things like that, not really through the formal financial services. So with this economic crisis and COVID impact, what we're seeing are generally two things. For Nigeria, for example, where a significant amount of our foreign exchange income comes from oil, as well as international remittances, it's the double whammy. Because as you can see what's going on in the oil markets right now, nobody wants to buy the oil, even at a very reduced price. And Nigeria is still further discounting her oil to even get off-takers in general. Then when we look at the remittances, I think as about 2018, our total receipts and income from remittances was about 23.6 or so, thereabout billion. And that's really, Nigerian remittances are quite a large proportion, even though it amounts to only about 6% of the GDP. So with those two economic indicators that we're looking at, the oil price and the lack of work and the uncertainty in the European countries that we're usually repeating from, like Leon said, we can begin to see that there's going to be there's going to be reduced consumer income, because a lot of these remittances are used for household income, investment purposes, as well as entrepreneurial activities. And other than that, so when you think about all those three areas, they're just going to shrink in general. Across the region, the informal markets will definitely shrink. But one thing that we're already also seeing is how the mobile money operators are using their platforms across the regions, especially those ones that play in different markets in general. So you have the likes of the Orange and the MTN that are able to move monies across regionally. And then you also have banks, both Nigerian banks and other banks, who can also move money regionally within their banking ecosystems. But as you can see, all these are digital transfers. The bottom line still remains, how will we convert these into cash? Because when you think about our informal markets, a lot of our informal markets are still cash oriented. Some of the formal organizations as of today or yesterday are sort of reducing their cash acceptance and really preferring in preference of digital payments, bearing in mind that the banks are going to reduce their operating hours and their services in general. And we're already in Nigeria trying to run a cashless policy that's also prohibiting the use of cash. So what people are trying to do is also hedge and trying to say, okay, we don't want the cash, we need to sort of conserve and use digital payments, and that money, and then it's also reducing your risk in general. But across the region, there's going to be less traffic because the borders also are shut. So that informal market is also going to shut for remittances. We hope that institutions, if people do want to send money for family emergencies, there's some organizations that have struck up partnerships with remittance companies like TransferWise, and what they do is that they do end-to-end transfers into bank accounts. But so we hope that with card payments and with bank accounts, then people can actually continue to pay and continue to survive. I'll stop there, Penny.
Thank you, Inka, for that contribution. Just asking you, I mean, you speak about the double whammy. So it's a reduction in forex from oil exports. It's a reduction in remittances. I mean, we know that a lot of the sector, the economy in Nigeria is an informal economy. your sense of the sort of differential impact of remittance flow reductions on those two parts of the Nigerian economy?
Well, it's going to be significant, because when you think about the households that are receiving domestic remittances, for example, what do they use that money for? It's typically for consumption purposes, right? Food, medical care, school fees and education and things. So right now schools are shut, so fortunately there's no education costs in general. But then when you think about lower incomes coming in, and then you lower receipts coming in, that's also going to take a toll on the household income. In these trying times, another thing that we're going to see is the impact on inflation and food costs in general. So you can see that there might be, because of devaluation, there might be more cash, but then again, that same cash won't buy the same amount of goods and services in general. So we're going to begin to see a contraction in the economy. We're going to begin to see people hold on to monies. There's going to be less consumable income. The middle class is going to be a bit more prudent in how they're spending in general. And so right now, we're still on the verge of a shutdown. We're waiting to see how the government's going to react. The central bank has started some intervention funds for small businesses, especially those in those industries that are going to be hardest hit, like health, like the healthcare, for example. We already have ailing healthcare systems that have lacked any attention. So that's also going to further strain them. How do we even get the right equipment? So that's one intervention fund for the healthcare and pharma industries. The other implication is for the businesses like the tourism and service industries that are going to be hardest hit as well. So those are some of the things that are unfolding every day. And as Leon said, these are sort of daily occurrences, and we're continually watching and waiting.
All right. Thanks a lot. Well, some questions are coming through. Firstly, from Mark Kodjobom from Togo. How did you measure the remittance flow toward Africa? So the remittance flows are based on World Bank data, World Bank balance of payments data. So they measure formal remittances, and they do not include informal remittances. Then there's an interesting question here, and I think, Nikki, to you and Inka, if you want to come in, any details on what remittances are used for in percentage? For example, health, real estate, I would imagine food, and so, etc. So it's David Akwe, also from Togo. Nikki, do you want to venture an answer there?
Yes, thank you, Henny. So the manner in which the remittance transactions are coded in the background, it is sometimes quite difficult to understand it. We've done an initial deep dive on 3 countries, and it looks like over 60% of the money is consumption based. So it's for food and basic living. There is a percentage for education, and there is a percentage for housing. We have, however, in the region, a new ADLA was introduced, ADLA 4, last year, which allows remittances to be used for goods in a country. And there are 2 programs that are currently running, one into Zimbabwe and one into Mozambique, where in South Africa, your family member can send a remittance in theory into Zimbabwe, but what it is doing, it is going and paying a warehouse for your baked beans or for your mealie meal. And those numbers, I've actually got the numbers, and we're watching the way they're increasing. That seems to be coming through quite strongly also.
Thanks, Nikki. Just please, for those who don't know what an ADLA is, explain that.
It's an authorized dealer with limited authority. So they are basically allowed to clear funds cross-border, but they can't settle funds cross-border. It's a different category of cross-border remittance that was introduced in South Africa, if I recall, in 2010. I've actually got the date here. Sorry, 2012. But it's different versions of cross-border remitters.
Fantastic. Thanks, Nikki. Inka, any contribution you want to make on how people actually spend their remittances?
Well, it's similar to what Nikki said, consumption predominantly, but also in Nigeria, there's for entrepreneurial activity, where entrepreneurs are looking either to start a business or scale their current business or invest in assets. But last year, the Nigerian government also set up what we call a Diaspora Commission. And the function of that Diaspora Commission is really also to try and streamline in remittances for investment purposes. And so that's one of their functions and policy areas. So we now have a Diaspora Act as well as the commission to do that work. And they're still sort of gathering momentum and trying to do things like that. But that's sort of one of the initiatives that we can begin to see that in a formal sense, how do we sort of structure these inflows into the country and help the diasporans better unite themselves with the country again.
Great. Thanks, Inka. And the questions coming in now really deal with policy responses, and that gives us a good introduction to Barry's contribution. So Sarah, if you can go to the next slide, where we really starting to ask the question, what will the remittance recovery from COVID-19 look like? Sarah, if you can go to the next slide, I think that'll be terrific. So that's the question. And then really in the next slide, and I think you can put the animation in there as well, we had, and the next one, we've had a experience, certainly over the past 15 years, of two particular drops in remittance flows. One as a result of the global financial crisis in 2008, 2009, and the other one a result of the oil slump from 2015 to 2016. So the first one created a reduction of about 5% in remittance flows to Africa, and the second one about 6%. But Barry, you've been thinking a lot about what it's likely to look like this time. So yeah, give us some sense of how you think this could play out. Do you think that we are likely to see drops of this magnitude? I was interested in Leon's point earlier that some of the agents in Europe are seeing a 40% drop in sending, which is significantly larger than what we're seeing in here. Yeah, Barry, what's your view? How's this going to play out?
Thanks, Eddie. So it'll be largely dependent on the recovery of the sending markets, and then looking at the degree to which the receiving markets are negatively affected, and how long that repair or recovery within those markets would take place. I mean, there's a lot of speculation with regard, is this a W curve, or is it a C curve, or is it a U curve, or an L curve? But that would also depend on the pandemic. Will this pandemic happen in waves? Some of the scientific community are saying that these kinds of pandemics can occur in different waves. And what would the net impact be? Already we're seeing that there's impacts on two different levels. There's the macro impacts, and then there's the micro impacts. The macro impacts being, so for instance, Nigeria selling oil at 100, well, its cost price for oil is $144. And currently that's the rating agencies are looking at sub $20 barrel prices in the futures. And that's hugely problematic. We know that tourism has been stopped in many countries. So those jobs are, if not at risk, they have fallen away. And there is potential for significant impact in SME, particularly micro enterprises in the short term. So what that recovery will look like will probably be different to the global financial crisis or the oil slump. It'll be a combination of those, plus with the added impact of rebuilding SME and other industries that are affected. So what are the policy implications? So the policy implications, you've got three different levels. You've got the immediate, what needs to happen immediately, and those this is a complex problem. You can't really simplify it. Actually, it probably falls into the category of a wicked problem, because there are multiple multiple potential strategies or tactics, but they all have significant downsides, and there is no really great outcome. So in immediate interventions, one has to act responsibly. And it's all very good and well that a lot of governments have put in place a restriction on cash transactions by advancing or restricting fees on the digital transactions, which is great. But as Nikki rightly points out, you need a digital ecosystem in order to enable the utilization of that commercial currency or digital currency into the economy. And unfortunately, what we see from all our research is that most of those digital ecosystems are very shallow, and they are mainly in the core urban areas. And what you really don't want is for people to have to travel during this time from rural or peri-urban into core urban areas. And another thing that we need to be responsible in terms of these agent networks, cash in and cash out agent networks. They really need to understand the risks. All those are face-to-face transactions, and not only face-to-face, but they're banknote transactions. And we've seen from the Swiss research that banknotes can sustain not only this, but many other different types of viruses in the lab under normal daylight conditions. They can sustain them from 2 hours up to 17 days, depending, of course, how that banknote is contaminated. So, and that's in normal. I mean, that for me is a big issue, because handling of cash then becomes a higher risk profession, and many of the agents are perhaps vulnerable groups themselves. So we need to be really responsible in how we apply these policy considerations in the immediate impact. But then it also provides us with a view to looking at the policy implications for recovery, and then also within the longer term. And there lies some of the green shoots in this terrible complex problem. But particularly habituating people into digital over this time has got many other implications, particularly in the recovery of financial systems. What we're seeing over here is that we're taking immediate steps for immediate necessary health implications, but we are then going to reap some of the unforeseen consequences in terms of and also foreseen consequences in terms of those value chains. Some of them can be positive in that we can then start habituating people towards digitized payment streams. But as Nikki points out, there are many factors involved there. It's not just as simple as saying we need to have a policy of digital. We need to look at that value chain. Those value chains are highly complex and convoluted, and that's probably why they're so expensive. So we need to look, along that value chain, what can be done in sending countries to digitize that portion at least. And as Leon points out, in some of the sending countries, digital rails are available and not used, and in others they're there and not well used, and in others they're just not there or not used at all. And so that's part of the problem. But it's in the receiving countries where the biggest issue is, and some of the biggest health concerns are. Particularly important in terms of the systemic impact for that we can see is on cash reticulation and cash availability. So from our research, most agents or cash in, cash out agents are 97%, in fact, are less than 5 kilometers from a bank or a post office or a MFI. So that has serious implications. So if your banking system is shut down, it means that by implication, your mobile money and other encashment or network services are shut down. So even though it's electronic, because you can't operate that electronic value in the market, that is shut down. So there's a lot of sensitive policy implications in maintaining the cash reticulation system, both from central banks and from banks themselves within the immediate term, but also in the longer term, and looking at placing things in play now. I think now is the most important time to start the rallying around digitization in a responsible way that will outstrip just the immediate term of this crisis, and in a way that will inoculate these financial markets against future crises of these proportions. It's also important that because meager remittances are flowing through the systems and will probably be suppressed for at least a couple of months to 2 years, it's so much more important that those remittances that are coming through have got sufficient value, are not overly taxed by a convoluted value chain.
Thanks, Barry. Yeah, thank you for that. And I think the questions coming in are also focusing very much on the policy implications, and particularly the drive to a cashless economy. And I think in the policy discussion now, it would be good, I think, to just for simplicity's sake, split the discussion between sending countries and receiving countries. So, Leon, in our discussions earlier this week, we discussed the possibility of sending countries where the virus are particularly severe, extending to migrants the same types of benefits that they're extending to domestic employees. And I think we're certainly of the view that that's unlikely. So from an African perspective, what are the policy options available to countries in Europe and North America and Asia, to the extent that they do want to, in this time, support people in Africa that receive remittances from Europe?
Thanks, Henny. So I think maybe just to clarify the point you were making, I don't think migrants will be deliberately excluded from the benefits that the general populations are getting. So if they're working in a job where there's wage support and they're fully employed, they'll get exactly the same benefit as anyone else. I think the real challenge is that they're not going to get any specific or special treatment in many cases. However, I think there are some things that could be done relatively easily in the send markets. I think these range from, let's say, some consumer protection issues. Countries could actually take some action around to ensure that pricing initiatives, that basically prices are not increased, and hopefully companies that are sending money are encouraged to decrease them where that makes sense to do so, and particularly for digital payments, given that they should be lower cost for many anyway. I think one of the things that would help is certainly around, and I see we've got a couple of questions on this from an African's perspective around regulations and so on. But I think, and I think definitely in Africa, that would help to speed up the acceptance of newer companies and newer ways of doing things. Let's try and get companies or solutions to market, particularly where they're held up by regulatory considerations that are either slow or overly restrictive. I think in many countries in Europe, as you know, we went from a situation where there was €1,000 or equivalent, or $1,000 being the amount at which enhanced due diligence would come in. So below that amount, there were either less or no requirements for consumers to be able to use the service. But also, many countries have now introduced a process where a money transfer operator has to check that the person sending the money is legally in that country. So not only who they are, but they're legally in that country. which drives a lot of transactions into the informal market. If we want them into the formal market, we need to look at whether those types of approaches can be addressed and changed. But I think one of the key things is to educate senders of remittances on the options available to them, and to help them build up trust that particularly digital solutions are available to them, and that they can actually use them very simply. And I think that's one of the sort of almost first case easy win type of solutions that could be undertaken. And then I think, aside from that, there's a number of probably longer term initiative that could be brought in to actually help money transfer companies. I think the other thing, and this is, I know it gets said every time, but I think is really to have a strong dialogue between the service providers and governments, and actually ask them what help they need, make sure that the services are open and the customers can actually work with them. So that's for starters, I guess, Henry.
Thanks, Leon. I mean, what I hear you saying really is that in the short term, there are 4 things that governments can really consider. The first one would just be looking at monitoring the costs of sending remittances from countries and making sure that there are not inordinate increases in this time, in the same way that they're clamping down on people who hoard toilet paper and other things and selling it at high costs. So controlling the cost seems to be a first suggestion you're making. Secondly, that where we have business concepts for digital payments from countries that are being held up by regulatory restrictions at the moment, those should be considered, and see if we can get accelerated approvals for new business models. I think the third one you're mentioning is the hardy annual of anti-money laundering controls, and that this, if there was ever a time for relaxing these, it is now. And then the fourth one, which I think is particularly opportune, since you mentioned earlier that most remittances out of Europe are still cash, is really education. Going in with education in the same way that we're educating people to wash their hands. Leon, am I hearing you correctly? Are those the sort of 4 options that we can identify in the short term?
Yeah, I think very good, Henny, and you could have saved everybody a lot of time if I'd have just listed them like that. So I think you've understood very well. Thank you.
Yeah, no. I'm just trying to make sure, because we hope that people will go away from here with some options. Let's move to the African side of this. Alphonse Mwangi said that Kenyan mobile network operators and banks have reduced fees to senders of money. Is this a trend across other African regions? We've certainly seen that in, I know in Rwanda as well. I think one of our other commentators made the same for it happening in other countries. Yeah, let's turn, Nikki, firstly to you. The cashless environment, I think the last mile is significantly more cash intensive in Africa than it is in Europe, but people are recommending rapid digitization. You had reservations about that because the ecosystem doesn't take place. How should we think about that now? I mean, I think reducing the fees is obvious, but when people simply don't have those options available, what do we do? What's your sense of that?
Thank you, Henny. So, and I mean, it really is a tough question, and the way we are viewing remittances and remittance channels is our view it should really be declared an essential service worldwide, and based on that we start to look at some of the things that can be done, because it is actually an essential service. Our challenge in the money leaving South Africa and going through to the rest of the region is we have no mobile money in South Africa. And I know the excuse has been we have no money because of regulation. You know, one of the biggest reasons we don't have mobile money is that you need a domestic remittance environment, and the retailers own that. So it just didn't work. A big piece of work has been done, which I know Barry's aware of, around risk-based. So in South Africa right now, you don't need all of these heavy due diligence requirements to open bank accounts. The challenge is that a lot of the larger banks are not prepared to reduce the KYC requirements, like the big one, the proof of address. And we need to start pushing that. We can start pushing those boundaries and moving people into being digitized from the source of their funds. I mean, the value chain that we talk about, most of these migrants are paid in cash. Why on earth would they then go and open a bank account where they almost need to give DNA to open it because our banks are asking for full KYC, and then send it digitally when the bank remittance channels are more expensive than the ADLers? So this is where we need, and it's similar to what Leon is saying, but our focus will be different because of our local environment. This is where we need to be doing the work. We actually are currently doing a full scan of everything that's happened, where the problems are, and trying to work with the regulators, the financial service providers, reducing costs, increasing access, doing all those good things.
Right. Inka, your perspective on what can be done in African countries on the receiving side?
I think on the receiving side, we've been attempting to do a lot of these things. I think Nigeria is one of the few markets where we don't have a high mobile money penetration in general. Other West African markets and other African markets have seemed to sort of take on mobile money as a payment system. But I think here again, so we now look at what do we have and what can we do? Because whatever we need to do has to be a today's solution, not a future solution. And this also opens up a lot of the issues and also brings to mind that some of these things need to be done in a very agile manner rather than waiting for things to happen or not happen thereafter. So when Barry was talking about, the last mile issues and the issue about having agents and having to do some of these transactions over the counter, those are realities that we just can't avoid today. So if you think about what are the alternatives to those kinds of cash transactions, it's also about what's easily convertible into cash. And one of the things that has, one of the payment instruments, although it's not a valid payment instrument, is airtime. So I can sort of transfer airtime to somebody, and then that person can convert it into cash through a third party or through anybody that wants to buy. So that's a peer-to-peer mechanism that people might resort to out of desperation or lack of alternatives. We still are not seeing, depending on when the banks shut, then we'll begin to see the real impact of this thing. Because again, even if the banks shut, will they be servicing or distributing money through their ATMs? And that also brings to the point where a lot of our retail merchant channels have not really been converted to digital payments acceptance. So how do we ramp those things up in general? We haven't done a very good job, and we've always relied on point of sale terminals and bank cards. So how do we ensure that we can take those to the bottom of the pyramid and lower end markets? Fortunately, we do have the KYC issues sorted out in terms of the 3-tier KYC. But then again, it's really about when people are already receiving money in cash or they feel safer with cash, they're just going to withdraw everything from their bank accounts and repositories. So for me, it's really a lot of these things are happening a little. They're a wake-up call for all of us as operators, as governments, but I think it's also, we need to be mindful that emergencies such as this should not be what triggers us to deal with issues like last mile connectivity, interoperability, and also interconnectivity. So we need to be a bit more agile and really begin to build those digital ecosystems.
Right. Thanks. I want to summarize here, but I want to just ask Nikki. Nikki, you made an interesting point of declaring remittances an essential service. What type of concessions or opportunities do you think that would be able to unlock?
Oh, and that's a good question, and we need to think about that one really seriously. But if you think about it, if it's essential services, all of these blockages, what Inka's talking about, that the agents still need to be available, that we are still going to have to get cash, that all of those blockages we're going to have to make sure is not a blockage to people receiving what they need right now in the short term. because as I said yesterday, we're not going to get 4 million phones out tomorrow and have another 500 base stations and have, so we need a short-term solution. And I would imagine that that's the way we're approaching it from a FinMark perspective. Where are the blockages in the current situation to people receiving the limited amount of remittances that they can, like the agent network? And then what are we going to learn from this? Because I'm telling you, all this data we're showing now from the World Bank and everything else, I don't think that's what we're going to be measuring in 6 months' time. I think that the way we look at this world is going to be so different, and we're going to learn from that. And then how do we make it better? How do we push digital? Why is digital not worked to date? What do we do based on the quick reaction now, which may be, you know, more manual, and the longer term reaction, and how do we take it forward? How do we take these models of people having the food in country and you just go and fetch your food? You don't need to touch a banknote. How do you know, all of those models I think need to be looked at.
Thanks, Nikki. It's interesting. We had an interesting comment from Alphonse Mwangi in Kenya, who said that banks in Kenya have reduced fees for senders. It is a trend across Africa, and we said that is in fact happening. And then we've got an interesting question here from Herman, one from not quite sure which country. He says, since outbound remittances through the West African Monetary Union through mobile money is prohibited by the central bank so far, do you think regulators can play new and key roles to facilitate money transfer across Africa in the current environment? Barry, I'm going to ask you to respond to that quickly. And Samuel Koroma has a similar question about the relaxation of digital financial services. So I think a number of them are coming here. And then there is a very interesting comment from Barbara McNoney, which I think ties in, Leon, with something you said. Just comment more than a question. It sounds like a huge opportunity for employers to pay some type of benefit to workers to push digital adoption. And I think one of the interesting results from transaction analysis done in Nigeria earlier this year was that the biggest predictor of whether somebody will make a digital payment is whether they had a digital receipt. So that certainly is a driver here. Barry, before we summarize, any comment on regulatory changes for cross-border flows? And then Sarah, if you could also go to the next slide, where we just look at some of the interesting current announcements by the African Import-Export Bank today that announced a $3 billion facility to cushion the impact of COVID-19. So that also shows that there are macroeconomic responses. So Barry, a final comment from you on this as well as regulatory opportunities.
Yeah, so thanks, Henny. There's various reasons why central banks could limit or be skeptical on the flow of mobile money or digital money, particularly cross-border, because it does represent a higher MLTF risk. But when these transactions are sourced digitally, you usually have an audit trail, and if you can validate the process and understand the whole value chain from one end to the other, it's actually very, very low risk. It's much lower risk than, say, for instance, a cash transaction flowing across border. So, but the problem that we often find is that the risk-based approach and risk-based supervision is not effectively taken up by institutions, and particularly central banks who supervise the FIC or FIU's implementation of the FATF recommendations. So that becomes important. It becomes important to look at how the risk-based approach has been implemented in those jurisdictions, and what do they see as high risk. Often we find that it is compliance risk which means that it's not a risk that really affects the underlying risk of the transaction. It's not a mitigation. It's merely complying with a list of requirements in the hope that they will affect the risk. And in a lot of jurisdictions, that's kind of dressed up as the risk-based approach. And we find a continuum of these regulatory approaches, from a rules-based one on the one hand to an outcomes-based on the other. And as Nikki points out, even in South Africa, where we've got an outcomes-based approach, it's still difficult to get institutions to open up their systems to really look at the risks of the transactions and not the compliance that they stipulate.
Great.
Yep.
Yeah, Barry, perhaps a final comment on the macroeconomic options?
Yeah, so this problem has micro impacts, but the macro is really, really important. It's important to safeguard these flows from the developed countries, and particularly looking to exchange rates, the efficiency of the flows getting through with the least amount of spread or margin having been extracted from them. My view is that you need to safeguard these flows in order to prop up the lack of alternative income, or as a means of recovering industry and jobs within the developing market. So right. It means that I think that the governments need to, and also international organizations need to come together to really look at the recovery of this thing. It's not just good enough to look at the immediate impacts. We need to look at what will be the best way of facilitating these remittances in large enough flows in order to sustain a recovery in the developing world.
Thanks, Barry. Right, well, before we do a final round, it's interesting, in terms of the response from receiving countries, it seems to me that there are 6 opportunities that have been identified by our panel. The first one really is to declare remittance services and essential services. And for those who have observed the lockdown regulations declared by the South African president, there's express exemptions for the financial sector to keep open financial services. So this, in the current very restricted environment, it would allow these services to continue to be performed. And I think that's a good recommendation from Nikki. The second one really is that in Africa, there are a lot of risk-based exemptions for anti-money laundering and due diligence for remittance receivers, but the problem are much more with the receiving banks. And that some pressure on financial institutions to relax their own internal credit or risk controls rather is an appropriate measure. The third one, which I think is interesting, is paying migrants in cash, not in cash rather, but in digital means. And I think that's an opportunity which would also require some public communication. The fourth one is obviously reducing costs, which I think is one which is already practiced by a number of governments, as one of our questioners have also pointed out. The fifth one really is to extend digital payment instruments. I think that's a much more medium-term one, but there are short-term opportunities. And then finally, just relaxation of regulatory hindrances at this stage that prohibits us from actually introducing digital cross-border transactions. And I think, Barry, your point is quite appropriate. Let us not look for bogeys currently when in fact there are none or very limited ones, and actually have risk-appropriate cross-border remittances flowing in between our countries. Yeah, finally, I think, Sarah, before I hand back to you, we've had a great discussion, but let's just do a final roundup. We've heard the recommendations. Leon, any final words from your side?
Yes, thanks, Henny. Thanks to everyone for helping organise this. I think this call has been a great demonstration of different parties getting together in different countries and trying to solve a common problem. I think what we need to do is to try and get governments to do that in this remittances space as well. And we need to bring attention to governments, A, on the plight of migrants and remittances and what the longer term effects might be, as well as the short term ones. And B, make sure that we have a more consistent regional stroke global approach than we're currently seeing. And I think those are areas we really need to look at. And just maybe to highlight, somebody mentioned it already, the IFAD initiative to set up a task force around this space, I think is an excellent thing that we should all look to try and support and participate in. And thanks very much again.
Thanks, Leon. Well, let's go from north to south. Inka.
Hi, thanks, Henny. I think I share Leon's view in the sense where we need a collaborated and concerted approach to ensuring that we are all secured. I think the implications of remittances, both at the macro and micro levels, warrant significant attention, because the whole idea is that, again, it's a double whammy. The macro doesn't have enough funds, and then the micro households are also affected in general. And so I think that we need that kind of intervention. Thank you.
Thanks, Inka. Nikki, from your side.
Hi. Oh, I'm not on mute. Okay. So yes, thank you for putting this together. I think we all know how passionate I'm about remittances, but how important it is to our region and to everything that is happening all over. And the more we can collaborate, the better, because each of our use cases are quite different by region and by continent, and potentially that's going to help us to learn different ways of thinking and doing this. I don't think this is a problem that's a one-man or a one-band solution. So yeah, I think that's the important thing we need to keep in mind.
Thanks, Nikki. And Barry.
Yeah, so from the policy and regulatory point of view, there are a lot of interventions that are really just waiting to happen. Yes, in the short term, it is very, very difficult, and we need to be very, very cautious not to put people to hardship, like, for instance, mandating digitization in a way that would cut people out of the system. But there are definitely a lot of ways of looking at risk-based supervision, risk-based approaches, understand the supervisory or the risks inherent in these transactions, and that opens up a whole new field of regulation for innovation, bringing in the new fintechs, bringing in other players, bringing in areas where you can, in the intermediate term, let me put it that way, ensure a better recovery. There's a lot of superfluous interventions or regulations that are not actually risk-based and are merely compliance. And I think that's one of the areas. It's the lower hanging fruit in this very complex problem.
Right. Thanks, Barry. I think perhaps to summarize then, the remittances will continue to be a lifeline into Africa, particularly at the moment when so much of other economic activity will be depressed. They are likely to reduce more than the 5% we saw in the financial crisis, or the 6% with the oil slump. They could be significantly bigger. For now, what I pick up from our panel is that the critical criteria is that which still flows must flow at the lowest cost and the greatest efficiency. And that means that governments on both the sending side and in receiving countries must do everything possible to maintain these flows, whether that means declaring remittance services as part of their broader financial services as an essential service, whether that means accelerating digitization where that can be done within the shorter term, or simply where that means that lifting some regulatory blockages to facilitate cross-border flows. and digital models which up to now have been blocked. Those are immediate solutions. The macro problems are much bigger ones that will require much more concerted effort. Thank you to all of you that have listened. I think, Sarah, over to you. You will just give a sense of how these materials will be available after this webinar. Sarah.
Thank you very much, Henny. And going to repeat again, thank you very much to Barry, Leon, Nikki and Inka for sharing their expert opinions with us. Thank you to everyone that joined us today and have put forward some fantastic questions. And thank you, Henny, for doing my usual job, which meant I could sit back and relax and enjoy the webinar today. It's been a really informative process. What I'm going to do over the next day is I'll be processing the video recording and we'll be sharing it with everybody who signed up. So even if some people didn't quite manage to make today, they will still get their webinar recording. And we will also be posting it in DFI's LinkedIn group, which is called the League of Digital Finance Professionals, which again, I'll encourage you all to join. And also it will be up in the DFI's website under our webinars section in our knowledge bank under our community tab. So hopefully if many of you will also receive the link, you can share that link again out to your friends and colleagues who perhaps missed today and would find it interesting. I'll also be sharing in that email that comes around to you the links for our next webinars. So DFI's normal webinar series without this pandemic, our next webinar is the 2nd of April with Ignacio Mas talking about user interfaces and making them more customer friendly. And then our second series in this special series we're doing on the impact of COVID-19 will happen on the 6th of April. We don't have all of the details yet for that 6th of April session, but it will be focused on looking at the impact on gig workers. So like your Uber drivers, for example, who are obviously going to be affected a lot by the countries that are going in. So thank you very much, panelists. Thank you, Henny. Thank you also to Senfree for pulling together this at the last minute as well. We really appreciate being able to get this information out and start these discussions amongst our alumni. And we look forward to seeing you all on the next webinar on the 6th of April.
Thank you.
Thanks, everybody.